Good afternoon, everybody, and welcome to this live video Q&A on BusinessZone.co.uk in association with Xero. And today it's a full-on cash flow masterclass. So we're going to be discussing everything you need to know about getting that cash flowing through your business and managing it. And we're joined by three experts who know everything there is to know about cash flow. We've got Ashley Driver and Helen Gibbons from Xero, and Colin Hewitt from Float. Hello, everybody.
Afternoon.
Hello.
Hey, Dan.
First of all, if I just quickly move along the line, and if you just want to say more specifically about exactly what you do. So, Ashley, we'll start with you.
So, hi everyone. Hope you're having a good day. So, I'm Ashley, and I'm an education specialist here at Xero, creating lots and lots of resources that we're always introducing, and lots and lots of webinars as well.
That's why Ashley has the very professional microphone. Colin, what about you?
Yeah, I'm Colin Hewitt from Float. We've been running Float for a couple of years now, and it's basically a cash flow forecasting add-on for Xero and for some other applications. But yeah, focusing on Xero at the minute.
Lovely. And Helen?
Hi, I'm Helen, and I'm the Community Education Manager at Xero, and I really look after any relationships that we have within the education sector, small business associations and professional accounting associations as well.
Brilliant. So if you've got any questions that you'd like to pose to the panelists and you're watching on Business Zone, at Business Zone, I've got my phone ready and I can see them coming in. But first of all, I've got a few questions of my own that, just to kick off with. And just generally, do you think that British businesses are generally bad at managing their cash? Ashley, do you want to start with that?
Yeah, so I think generally there are a few areas where British businesses do tend to fall when dealing with their cash flows. I think one of the biggest things is really not identifying the difference between actually having cash in the business and the difference between that and profit. So I think that's a really fine line that business owners need to be made aware of, that actually just because their business is making a profit doesn't mean they've actually got a cash in the bank to meet a lot of those short-term debts. But there's lots and lots of different variations of that as well. I mean, one key area what I think business owners tend to do very well in the UK, what I've come across speaking to them out and about, is actually I tend to see a lot of them actually just use their business bank account for their own personal transactions as well. And really, you can't run a successful business if that is the case. You do need to define that difference between your personal expenditure and your business expenditure as well. So there's a few things that I don't think they do particularly well.
Colin, what about you?
Yeah, it's always a bit of a shame to me to see a business going bust because of like bad cash flow management, and I think the statistics are something like 80%. Site cash flow is one of the reasons for going out of business. So it's pretty scary, and yeah, for us, it's a lot of people are either running a spreadsheet that is so complex that they don't really have the time to go in and update it, or they're just using their bank account as their kind of main metric and a finger in the air, back of an envelope, which is fine for some people, but actually, it's not always the best whenever things start to get pretty busy.
And Helen, what about you?
I think there are some businesses that are really good at looking after their cash flow, and they see the importance of looking after that nowadays. Whereas there are some businesses that potentially, when they start out, they just go for the traditional payment terms like 30 days and think that everything's going to be okay, and they don't understand the importance of chasing those debts and keeping on top of their customers and things like that. Or all of those sales, thinking they can go out there once they've sold a few items to some customers and think, oh great, I can go out and buy some more now, and don't realise the relationship between the sales and the purchases. So there's a lot of things that the businesses can think about, but there are some businesses doing a good job.
Brilliant. We've had a question in already, and it's on the thorny issue of a late payment, and it's from Tony Robinson, who says 1 in 8 micro businesses are owed 1/3 of their turnover, which is quite a crazy stat. How does a business owner ensure they get paid by large corporations within 30 days? So, Ashley, what's your advice on the big late payment question?
Well, we did some really great analytics recently around about payment terms and how to get that money in faster. And one thing that we actually found is we took took a lot of a variety of different businesses currently using Xero, and we actually found the key date in terms of actually getting that money in within the 30-day period. And if you actually do want the payment to come in at 30 days, that key date is actually set your payment terms to 13 days. That is the niche date you need to aim for, because it's taken into account the amount of days that overlap in terms of the physical payment due date that you set. So the first thing I would definitely suggest is that key date, set and find your payment terms depending on your industry, depending on how much money that you want to get in. Stick to it, and also follow up those overdue invoices. Don't just leave them sitting there. Make sure you're proactively chasing up those debts from your customers, and you're keeping on top of your credit control.
Colin, what about you? What's your advice? Late payment?
Yeah, I think certainly finding somebody in the organization that's going to be responsible for that. So, getting a name is often one of the best things we find, is just get the name of the person, ask them, when they expect it to be paid, get them to give you a commitment on that. And if you do that early on, it doesn't feel like you're hassling. You're just trying to find out for your own cash flow needs. So once you've got a name, then you can really sort of play on that and get back to the person and say, look, this is what we talked about, this is what we expected, and it is just a case of chasing and being really, you just have to, be aggressive in that, and it's not always pleasant, but for the large companies, it seems to be often what is needed.
And Helen, what about you?
Yeah, I mean, to extend upon what Ashley and Colin have said, make sure that you document everything. Make sure you, like Colin said, get the key name of the person that you can liaise with within that organisation. But also, if you have a phone call with them, follow up with an email, keep all of those emails, make sure you've got that audit trail of every conversation that you've had. But also, don't be afraid to use something like a factoring company if it is a big debt that you're trying to chase. Factoring companies do that all of the time. That may be a good alternative that you can consider if it's a big chunk of money that you're waiting to come in.
Yeah, there's a great company out there called Market Invoice that if you do to a large company, they will actually buy the invoice from you and pay the money. So Market Invoice would be definitely worth having a look at, and I know they integrate with Xero as well. So it's something that we're definitely trying to put the word out about.
Yeah, it's a similar question. We sort of covered it, but I'll read it out. Lorraine Alman from Enterprise in Child has said, often with late payment, it's actually a business that's actually doing well but wanting to grow, and it's the clients that are holding them back paying their bills. So, that's it's not always a bad business, that's chasing debts. It's often good businesses that just need the money to grow a bit more, isn't it? That's often the way.
Yeah. One other thing on that is that sometimes just asking them if it's a business and they are having cash flow issues themselves, getting them to make an installment is a really is certainly a way that you can do it. Can we get an installment by this date? Often brings a bit more urgency and something that can be actioned as well.
Cool. Another question from me. What about preparing a cash flow forecast? Obviously, that can help deal with the problems. That you can predict them in advance. But a lot of people hearing words like that, running a small business, they're just like, I have no idea. So, what's your advice for preparing a cash flow forecast, Ashley?
He looks like he's frozen.
Oh, Ashley's frozen. Well, while we try and get Ashley back, Helen, do you wanna do that one?
Yeah, I mean, can you repeat that for me? Ashley's just thrown me off there.
Ashley still frozen? No, I think you might be back. Basically, it's about preparing a cash flow forecast. Yeah. What's your advice for?
So it's something that I believe in personally to do, and cash flow forecast, budget, similar kind of thing. With your cash flow forecast, trying to budget when you're expecting your income to come in, your cash obviously to come in, your cash to go out, when you may be able to maybe buy a new asset. That's so important to keep track of your cash over a longer period of time so you can plan for your business. And I can't stress enough importance upon the planning side of things for your business. Don't just sit there and think it'll all be okay. You know, you'll go out and sell some things, buy some things, and everything will roll along hunky-dory. You have to put that planning in place and make sure you're putting the time and effort into that. And you know, I have a personal budget myself where I look at my income, my expenses, and I think that's important for everybody to do. Yeah, it's definitely something that people should think about.
Colin, what about you on forecasting?
Yeah, I mean, that's basically our whole business. So, you know, we set up to, you know, I used to run a business where we maintained a spreadsheet to do the forecast, and just find that I was the only one in the company that could do it, because it was the spreadsheet got more and more complex, and basically, yeah, having a spreadsheet is nice because you see the long-term benefits. So you see that if our rent goes up by, you know, £300 a month, then you can see that effect over 12 months. So doing it in a spreadsheet is a fantastic way. It really doesn't have to be complicated. I think I've seen some really complicated spreadsheets. You know, certainly I don't even think a cash flow forecast for day-to-day purposes needs to be based on a P&L. It can just be based on cash. You know, this is how much, these are our costs that go out each month, and these are another sheet which is, these are all our accounts receivable, and that flows into your spreadsheet. It really doesn't have to be complicated. It's basically just like a notebook of cash coming in, cash going out, but letting you see that over, you know, 12 months or 18 months rather than just 1 month that you've done on your back of the envelope. So yeah, we believe that it's really, really important, and the nice thing about something like Float, where it updates from Xero, is that you don't have to put the actuals in all the time, and I think that's the pain point for maintaining a forecast, is, you know, every time you go in, you're having to look and see if it's up to date or not. But yeah, either putting the time in on a spreadsheet, or, you know, using a piece of software to do it. It really doesn't have to be that complicated.
Well, I think Ashley has dropped off, but hopefully he'll be back soon. We've had a couple of comments come in on the late payment thing, and Duncan Cheadle has sort of given us some advice similar to what you said. But one of the things he said is the last resort: sit in the reception and wait until you get paid. So I guess that would be a last resort. Lorraine has also come back based on the answer you gave to her question. She has actually asked, would you recommend offering a discount for early payment or on time, or does that actually devalue your products and services? Helen, what do you think about that?
No, I definitely think it's a good idea to offer something like a settlement or a cash discount if it's important for you to get that cash in quickly, so you can then either, you know, end up reinvesting or, you know, purchasing more of those products. You know, if it is something that you're buying to sell on, or there are some key things you're trying to build up the business as quickly as you can, I think offering a settlement discount for payment within 7 days or 14 days is a really good thing to consider. So I'd give a thumbs up to that one.
Yeah.
And Colin, would you agree on that one?
Yeah, I mean, I think it can be tricky depending on the size of the business. But yeah, I think it's back to that principle of getting an agreement with somebody early, you know, saying, look, we've got this cash discount offer. If you pay within 7 days, it's 5%. Is that something you'd be interested in? If they say yes, then, you know, then you've got a bit more leverage to say, let's you know, well, how are we going to work to make sure that actually happens? So yeah, I mean, absolutely, it's certainly better to do that than have to go through a factoring company if you can. So it only needs to be a couple of percentage. I don't think it needs to be a big discount, but it might just be enough to incentivize them to pay on time.
What are your thoughts on the other way? Because, you know, under European rules, businesses are able to impose interest, but a lot of businesses are a bit scared about that. What are your thoughts on, you know, if it's late, actually trying to charge more? Helen?
I think that's risky ground, if I'm honest, and I think that would, you know, potentially put off customers from buying from you again in the future. If you're saying, oh, if you don't pay me immediately, or I'm going to start charging you interest after 7 days overdue or something like that, I think it can affect your brand, you know, coming into the marketing side of things as well. You know, if people come across you and say, well, I couldn't pay for 7 days, but I told them, and then they started to charge me interest, I'm not too sure how that will go down. I suppose it really depends on the industry that you're selling in. So not sure if that's a good way to go.
Colin, what do you think about that interest?
Yeah, I'd agree with Helen. It's just, it's a bit of a minefield, and it all depends on the relationship with the client. And if that starts to go, I mean, I've had suppliers, even freelancers, be very aggressive in chasing, and it's just the manner in which you do that can really affect, do I want to work with this person again? If they're going to be, like, we've got an agreement, we're going to pay, we always pay on time, so, don't worry about it. And so I think, it comes down to managing that relationship. And if you feel that they're a big enough organization that they don't care, or you're trying to make a point, then it might be a good thing. But it there is a risk of souring the relationship with that. So I think there's better ways to deal with it.
Ashley, I think you're back.
I'm back. So a technical hitch there always happen when it goes live, doesn't it?
It's like live TV.
I know, live TV. I'm back. I clawed myself back.
Before you left, we were talking about cash flow forecasts. So it'd be good to get your advice. What's your advice for preparing a good cash flow forecast?
I think one of the best things to do is, I don't know what the answers were, but I think one of the great things with technology these days, especially if you're adopting, for example, cloud accounting like Xero, is those bank feeds. Keep on top of the information. If you're working and you're not in sync with your accounting, how can you be making key and accurate decisions on out-of-date data? So by using things like bank feeds, you can really, really quickly and easily keep that information up to date, and then you're always working off of that live and accurate information. So you're making those real-time decisions. So I think that's a really key sound advice there. It's good to see as well on the other side of the continent, think places like New Zealand or Australia, they're actually looking at kind of like a next generation of banking where they're using cloud-based accounting and information that's contained within people's accounts. And when making actually decisions about lending and credit and how solvent a business is, it's really speeds up that process, because they can just invite themselves in or get invited into the online accounting, actually have a look at those real-time reports, and you've got a much better position of that business's credit and whether you would give them that loan or not.
That's brilliant. Cheers. Thanks, Ashley. We've had a question in from Will King. You sort of mentioned lending there. Will King, the CEO of King of Shaves, he has said, are people aware of peer-to-peer cash flow solutions like Market Invoice, and would they use them? I think the faster people get familiar with peer-to-peer solutions, the better. Cash flow is king. Colin, you sort of mentioned Market Invoice. Maybe this means we can talk more sort of generally about alternative lending. What are your thoughts on the sort of where the lending market's going?
I mean, I think it's really important, and it's really exciting in terms of basically, the banks are not often the best solution for short-term loans, especially if you're a startup business and you're not even profitable yet. The banks just don't seem to want to touch that. There's a lot of other options that we've been looking at, like Funding Circle, I think Everline as well is another business one. There's one called Cabbage that's come out, and all these are very short-term loans. They look at a lot of data points before they approve them. The interest is not ridiculous, so it's not sort of like a payday, loan kind of thing that's going to really hurt. And yeah, I think there's so many good options out there that you just need to get the right advice. And unfortunately, it's unlikely to come from your bank. So you have to go out and find people that can advise you. But I definitely look at Market Invoice. I'd look at Everline. I'd look at Cabbage, and Funding Circle as well.
I don't know Cabbage, but what a great name for a business.
Yeah.
Ashley, what are your...
It's with a K, I think. Cabbage. Yeah.
It has to be. Cabbage.com with a C has probably been taken. Ashley, what are your thoughts on the sort of alternative
So I think, like Colin said, there's some great solutions out there. But another thing that businesses might like to think about, especially touching on startups, are things like crowdfunding and things like that. So like source funding, advertising your idea, seeing if you can get the funding from other businesses, or maybe just people looking to invest some money into a new particular venture. I think there was that. I think there's a government scheme going on at the moment, isn't there, or coming up in the next couple of years about investing into those startups and new businesses, where it's almost like a fail-safe idea for those people who've got that excessive or the money that they don't really need. They can go and invest it into those businesses, and it's just a win-win because they're covered by the government if it does go belly up, so to speak.
And Helen, your thoughts on the space?
Yeah, I mean, completely agree that there are some really good alternative options out there nowadays, which is useful for businesses, especially when they are in the startup space. You know, they don't necessarily want to have to rely on just going to the bank manager and trying to get a loan there. However, I wouldn't, tell people to completely steer away from that. We have seen a bit of a difference with banks that are recently, where we've heard banks are actively being invited into some clients on Xero to look at some of the key reports on Xero and then decide there whether that business is viable enough to give them a loan. So, you've still got the traditional methods there, but there are definitely some really good upcoming alternatives around at the moment.
I mean, touching on that as well, the great thing that you've got nowadays, where you've got all of that, almost like the big data age, is the ability for all of that data be pulled together, and you can start actually making decisions. I mean, we're looking at the business intelligence going forward and things like that. So if you enter a name into an online accounting solution, ABC Furniture, for example, you will automatically, going forward, as the technology develops, be able to see whether that business, you should do business with that particular individual, because they'll be able to see the history and the interaction with other businesses using cloud-based solutions, and the terms and how long they've taken to pay. So it's really, really going to start to change the way that business is going forward in the future. It's great to see.
I think that just shows there is money out there. I think there's the perception, maybe from us media people, that it's all grim and you can't get any money, but actually maybe there's more money than there used to be, but it's just in different places. It's not necessarily down the bank. So we've had some more questions come in during that debate, and I'm going to pick one. Jules said, several people have advised me that I should look at reducing overheads to improve my cash flow situation. Does this really help? Helen, would you like to start with that one?
I suppose it depends what overheads that Jules is looking to reduce. I mean, reducing overheads will effectively, give your profit a boost. But as Ashley was saying earlier, profit doesn't equal cash. So there's no correlation between those two potential figures. If they're unnecessary overheads, maybe something that you don't need to buy right now, or go through the business, then absolutely, try and, especially if you're a young business, try and be prudent, try and think through all of those overheads really carefully. Are they all necessary right now? If not, get rid of them, and maybe think about that in the future. Don't go and buy a Sky multi-room for the office, maybe just straight away. Maybe just wait 6 to 12 months down the line and then get Sky.
Sky, crucial for small businesses. That's the conclusion there. Ashley, as you were mentioned there, your thoughts on reducing overheads?
Well, following on from that, I think one of the biggest overheads in business is kind of wages. So I think it's really, really important to actually have a good think about when is the right time to actually hire your first employee? Is that expense going to be a weight in your business in terms of the actual output that you're going to get from that individual? And another thing I'd really, really mention on is about giving yourself a wage as well, because it's often overlooked, like, oh, I'm trying to grow my business, I need to make that profit, I need to get the capital up, I'm not going to give myself a wage. But actually it's really counterproductive to do that, because all you're going to do is end up using your business business bank account, like I mentioned earlier, and you're just going to start using that when you go out on a Friday night and you're buying all your friends a drink, and you're going to wake up and you're going to come in Monday morning and you're going to have all of these bank statement lines in Xero, and you're going to have to account for them in your drawings. And so give yourself a wage. So that's again a really key overhead not to overlook, and don't take that out.
And Colin, on overheads.
Yeah, I mean, obviously, reducing your costs is a great way to save cash. If reducing costs stops you from growing the business, then you can get into a bit of a vicious cycle where you just don't want to spend any money. And part of the beauty of having a nice forecast is you can actually see where you can spend money, like where you can put money into, overheads that are going to actually be beneficial for the business. So yeah, it might be that reducing, if you don't need a big office, you could you reduce that, for the time being. But if having clients coming into your office is a big part of winning clients, then you're not going to want to reduce that per se. So I think where possible, overheads are a good place to look. But I think growing the business, that shouldn't come at the expense of growing the business, and that's really only something you can look at when you're sitting down with your forecast, and you can actually sort of try a few what-if scenarios and think about what the implications are of actually cutting those overheads in the first place.
Mm-hmm. AO has said, it takes me ages to sort out all of my invoicing using pro forma. How can I make the whole process easier? Ashley?
A few different things that you can do. One thing is to use, especially again if you're using cloud-based accounting solutions, you've got some great add-ons that you can integrate with your accounting solution, so you can actually almost outsource your invoicing or automate the process a little bit more efficiently. You can also deal with again, like factoring companies, like Helen said, can all deal with your invoicing, and of course you can do it a little bit easier by especially importing the data rather than physically entering it manually all the time. So a few different options that you've got there to deal with that and make that process a little bit more efficient there.
Colin, what's your advice on invoicing?
Yeah, I think invoicing is the main thing for me. Is you just you get the invoices out as soon as possible, and you take out all the barriers that are getting in the way. So do you need to have the pro forma invoicing system? Can you just get something straight out from from the get-go? I think getting rid of a lot of the red tape and just starting to get things a lot faster. Sending invoices through where they can actually just appear automatically in the other person's accounting system, is another way of reducing that. So yeah.
Good. And Helen, we've probably covered a lot, but anything else on invoicing there?
Yeah, I mean, I'd say just have some really good templates set up, whether you're using cloud accounting right now or you're not using a cloud accounting system, even if you're still using Word, make sure you've got some good templates saved, and then you can go in there quickly, pop in the key information you need, save it, email it out, and then it's done and dusted. But using a cloud accounting system, have those templates built into that system, and then you can key in that key information or pull it in, or maybe copy an old invoice and change the contact name if it's something that you're selling to a regular person or a regular product or service, and just try and think of some efficiencies of how you can make your life easier. Saving those templates is a really good option there.
Touching on that a little bit there as well, I mean, again, another great thing to think about seriously in small businesses, payment services. Not only getting those invoices generated and out the door, but it's great to see some solutions now that coming into accounting packages. Again, PayPal and the obvious popular ones can be integrated, and giving not only emailing your invoices out to your customers, but providing a platform where they can physically pay for that invoice there and then is a really, really serious thing to think about. So you only will get the invoice to the customer via your accounting solution, but you can also facilitate that payment as well.
Brilliant.
Yeah.
Colin, did you have something?
Yeah, I was just thinking, like, if you've got, I think, really if you're going to be doing a lot of invoicing, having all your having a set of all your products that you can just quickly, you should be able to create an invoice pretty quickly. It shouldn't take too long to do nowadays. Like, it's just, there's all the tools are available. I think in Xero you can have all your
Inventory items.
yeah, your inventory items there, and you can just say this amount, this thing, here you go, boom, and send it as a PDF, and it's done. It shouldn't take more than a minute. So if you're doing a lot of invoicing, just being, and then you have a record of that. So yeah, I think the solutions that are out there now mean that invoicing should not be taking up too much time. If you're doing it in something like Word, and then you're trying to find the file version that you last used, it's going to be a nightmare. So get on one of the online systems. I mean, we recommend a bunch, but I think there's so many good solutions out there for sending invoices.
Don't be afraid to change systems as well. I think that's one of the other things that businesses do. They get kind of sucked into their day-to-day routines, and they don't take the opportunity to stand back and change a process that's in place because, oh yeah, we're quite happy using Word, and although it does take us 20 minutes to get an invoice out, actually spend maybe, I don't know, a full day or maybe half a day researching, okay, well, what is out there? And in the long run, that return on investment of that in terms of time is going to save you so much when it going forward.
Yeah. Can I just add one other thing on that?
Yeah.
One thing we've seen, if you do send like a pro forma invoice where you are sending out, if you're going to be, you're planning to invoice in stages, but you send out one invoice. We used to see this a lot with creative agencies. They would often like get a contract, say maybe it was £20,000, and they would send one invoice, but then they would say 30% of this invoice is due by this date. And I think splitting invoices up is a great. Splitting a project up is a great way to get paid faster. So 30% up front or something like that. But rather than using the one invoice and splitting it into multiple sections, it's much more, which can get quite confusing. It's much better to agree the price and then send one invoice for that amount when it's due to be paid. It's much easier to chase. It's much more easy for the company to understand what you're asking for. And we've seen some really funny examples, and I used to send examples like this myself. Where you would send one invoice, the total amount, here's the percentages due now, and it's just really confusing. So keeping it simple and sending one invoice for one amount rather than using a pro forma invoice to kind of dictate that is definitely the way forward.
Great advice there, AO, so I hope that's really helped. You got lots of answers. Dave has asked, Christmas is coming up fast. I always struggle to get the right amount of stock in to meet the buying frenzy that starts in November. How can I be more precise? What's to take on Christmas? Ashley, Christmas has been mentioned and it's still only October.
I think I saw my first Christmas advert about August outside some bar. Anyway, back to the point. One word for that, I think, budgeting. I think it's really, really key to look at your previous trading, look at your previous history. What was last year's November's trade? What can you use and take from that in terms to flex out your budget and your expected stock quotes that you need to get in for this year? Always take a look at your previous trading and then kind of gauge in comparison to your current financial year. Take a look at whether that is up, whether that's down. Try and find some trends and analysis. Again, lots and lots of great add-ons. Float, for example, is one of them. I know that they've got different kind of what-if scenarios that you can put into their budgets, and if X amount of this happens, then I need this amount. So there's some great solutions out there, but the key is to look back and you'll be able to find your answer to go forward.
Colin?
Yeah, exactly what I was going to say. Just looking at what you did last year, and really, that's often one of the only things you can do. Also thinking about the cost of what if you overstock versus what if you understock. Sometimes it's just a balance of going, well, it'd be better, if we're 20% overstock, then that's actually not, that's better than missing out on the sales for that 20%. So I think figuring out, just making a few calculations and going, what we're going to have to make plump for something based on hopefully an accurate figure from last year. But let's make a decision whether it's best to be, to sell out, or whether it's best to have a little bit of excess stock. And I think only the sort of spreadsheets again can tell you that. So.
Helen, have you got anything to add? We've pretty covered a lot there, but
Yeah, I suppose from what Colin and Ashley were saying regarding, trend analysis and things like that, and look at what's happened in the past, try and work out, try and gauge what you think is going to happen this year, but not just looking back at the figures, but what is going on in the world at the moment. We've recently gone through recession, and what are people spending their money on? Is your product the product that they need to buy or want to buy for Christmas? If not, if it's in a bit of a downturn at the moment, then try and build that into your budgeted calculations for what you're going to buy as well. So keep an eye on the local economy and see whether your product is something that they definitely need.
That's great. I've got to read this one out. The person describes himself as a cynic, and they say, doesn't using all these systems just mean I'll be glued to my screen for even longer and I'll have loads of passwords to remember? Helen, do you want to start that one?
Definitely not. No. I mean, the good thing about using something like Xero, for example, we've seen a lot of people spend less time doing their day-to-day bookkeeping and keeping on top of their business, and we're not just making that up because I work at Xero. It's that we've got analysis to prove that. And not only, it's not just sitting there in front of your desktop PC at home. You can use a lot of these products on your smartphone or your tablet. You can go out and about. You can go down the road to a really nice coffee shop, sit there and, raise some invoices or reconcile your bank or look at what's going on in your business, look at some reports instead. So absolutely not loads and loads of passwords, because if you're using some of the add-ons in our ecosystem, they all link really nicely together as well. So no worries there.
Colin, do you want to take on a cynic?
Well, as one cynic to another, I think, as I was saying about the invoicing, if hopefully the idea of applications like Xero and Float is that it saves you time, and remembering a password is the least of your worries. Often nowadays a browser can save it for you, so if it's your own computer that you always use, it's kind of remembered anyway. But yeah, the invoicing story of if you're trying to do it by pen and paper, it's going to take you a lot longer to do it like that than doing it on a system like Xero. And like the same way, if you're doing a forecast in a spreadsheet, Float's going to save you a ton of time inputting actuals. So the whole point of this is that these systems they save you time. It's all about time saving. So if you find that it's not, then either you're doing it wrong, or you need maybe it's not right for your business if your business is straightforward enough. But yeah, for a lot of businesses, I think it's going to save like a massive amount of time.
And Ashley, got to let you have an answer to that as well.
Yeah, so touching on kind of looking at lots of different pages and having lots of information over lots of screens, actually it really is like both Colin and Helen just said, it's the complete opposite, because using online applications, for example, of Xero is like you've got everything where it needs to be. Like if you're not using an accounting solution at all, like you might have your invoices in Word, you've got maybe your budget in one Excel spreadsheet, you've got then your actual physical like cash book, your daily receipts and your sales in another one. Well, you've got things and solutions like Xero where it consolidates everything together. You've got all your invoicing in there. You've got even your bank statement information coming in there on a daily basis, allowing you to be a lot more proactive. All you need to do in there is every other day is just go and click some OK buttons. It's very intuitive, very, very interactive. You've even got features and functions in there now where not only have you got all of the data where it needs to be, but you've got things like files where you can upload and even email in your purchase orders, your quotes, and you can attach them directly onto transactions. So actually it's not only letting you look at one less screen because you're just looking at Xero rather than about 6 other applications, but as both Helen and Colin just said, it saves you time as well. It's very, very intuitive.
Thank you. Sorry, I have a colleague off to my left, in case you wonder who I was looking at, who's handling the questions, and I was just like gesturing, hoping no one was noticing, but you finished before I thought you would. So I had to reveal that. So we've had a question in from Lizzie, who has asked, why are receipts so valuable? Loads of my mates are really precious over theirs, especially for petrol. I've just started my business and I'm keen to see if this can help. So, Helen, what about receipts?
Well, you know, receipts are really, really important if you're VAT registered, because you need to be able to prove the VAT or on your income and your expenses. So that's something that I would definitely you know, ram home there if you're registered for VAT or thinking about becoming registered for VAT once you get further down the line. But in general, it's just nice to see all of the supporting receipts and invoices for all of the transactions in the business. You know, being an accountant myself and coming from practice, it used to drive me mad if there were missing receipts that I couldn't match up to transactions, because, you know, your accountant and, you know, HMRC and the taxman, they want to make sure you've calculated everything correctly. If you haven't got all of that supporting information, either online attached to a transaction or the physical receipt, you know, it could get you in a bit of trouble in the future, you know, if the taxman thinks that you've underpaid your tax, for example. So I think it's very important to keep receipts.
Colin?
Yeah, I totally understand that question, because when I started my first business, I remember thinking, like, I won't charge. I was like your baby, and you didn't want to, you know, charge things to the business. So I would buy things for the office and just, you know, not worry about it. And then you realize, like, actually every receipt, every business can come off. You know, you can claim that back rather than taking it as salary, which reduces your tax bill at the end of the year. So basically, yeah, receipts are valuable because every receipt is a deduction against your profit. So that's why you want to keep them, and finding an easy way of keeping them that doesn't get too messy. So what I do now is I use an add-on called Receipt Bank, and I just take a picture on my phone of any time I get a receipt that's for the business, and then throw the receipt away, and it all goes up to Receipt Bank and it all just stays there. So it reduces all that time.
Yeah.
And the same with forwarding PDF invoices, it all just goes in. So yeah, some kind of system like that where you don't even have to worry about it. My wife keeps, you know, a wodge of about that many receipts in her wallet, and I always wonder why. Because it's not, you know, personally they're not. I don't think they're obviously useful if you want to take something back to a shop, but from a business point of view, more just about tax at the end of the year.
And Ashley, receipts.
Yeah, I mean, touching on what Colin just said, it's really important to remember there's a massive misconception around receipts and kind of what is right and what is accepted. And a lot of business owners do think, because historically it has been the case, that you actually do need to keep those original receipts. And as all of the technology is emerging, I remember when I used to work in the customer experience team here at Xero, we'd always get like a question in from a business owner going, can I actually just keep the electronic version, or I've been told that I make sure I keep the paper version. And there was an actual change in the law with HMRC quite recently in terms of HMRC's entirety, and you don't need the original anymore. Like, as long as you can provide quite a clear electronic copy, and you're keeping that for the required 7 years that they require, then that is perfectly acceptable. You don't need to actually have that paper version. And often the case these days is that a lot of receipts and invoices are sent electronically, so you don't really need to print them out anymore. So save the trees.
So, save the trees and no more shoeboxes of Burger King.
No more shoeboxes.
A question from Dino. It's similar to one we've covered before, but my e-commerce business relies heavily on having all items in stock ready to go. This means I literally have cash sitting in my loft. How can I make sure I keep the right amount in storage? Who'd like to take that one on?
Okay, so I think in that particular case, definitely get some advice, because your business advisor or an accountant will be able to calculate the required stock reorder levels and things like that for you, so you can really analyze the data that you've got in your accounts in order to find that perfect level where you then need to restock. So it's really, really great for, and it's particularly used for businesses that have perishable goods, or need the right level of stocks in order to make their product or provide their service. So get some advice from a business advisor or an accountant. They'll be able to take a look at your numbers, and they'll be able to give you the right level of advice there.
Colin, have you got any thoughts on that one?
Yeah, I suppose around business models, I think a lot of businesses are now actually looking at is if our business relies too much on having a lot of stock and tying up a lot of cash, literally like he was saying in the attic, is that a really viable business model for us going forward? It might be a lot of pain, it might be a lot of difficulty. And actually, there's a lot of ways people are rethinking. You know, I work with a manufacturing company that decided that, you know what, we could actually, some customers are happy to wait a little bit longer and pay less, and pay less, which means that we don't have to stock. You know, we can say, purchase this item and we'll have it with you in 4 weeks. Some people are happy with that. Now, obviously, that's not going to work for all businesses, but I mean, it's why businesses like Amazon have done so well, because, you know, a lot of the items they don't stock, they don't have sitting around in a warehouse. They take the cash up front, and then they do the transaction afterwards. So I think thinking through the business model, you know, is there a way you can shift to something where customers will wait for a bit longer, where you don't have to have the cash sitting, the stock sitting around, or can you move to a bit of an even split so you're just not sitting with such cash flow problems?
And Helen, any thoughts on cash in the attic?
Yeah, well, other than
not
TV
program.
You know, really, to extend on that, the only other thing that I would say, can you come to some sort of agreement with who you buy those goods from, instead of you buying a load and that's sitting in your attic, for example? Can you come to an agreement when you say, when someone places an order with me, I'm going to place that order with you, and you send it out to them directly from there? You know, kind of similar to what Colin was saying about how Amazon work, and, you know, there's sites like Not on the High Street where, you know, they just bring together all those small businesses, and they don't have the goods themselves, but once you place an order on Not on the High Street, they then speak to that supplier, or it goes to them separately, and they then send that out. So I don't know if that's maybe something that they can consider as well.
The good old just-in-time business model there.
Yeah.
That's great. Lizzie has come back, the receipts lady, and said, awesome, mine are literally in a shoebox at the moment. Maybe it's time to move to the now.
Send them to Receipt Bank. They'll go and do them for
Receipt
you.
Bank will sort it out.
Yeah.
Put them all in a paper bag and receipt bank.
Don't burn them,
No.
This one is more of a comment, but Claire has said, we provide an outsourced credit control solution for small businesses and frequently have clients who haven't credit checked before supplying, and to make matters worse, don't have robust T's and C's. Don't forget that a sale is a liability until the money is in your bank account, which is a good point there. Mm-hmm. And also another one, this is from Money, is it with a, I can't quite see the screen. Having just emerged out of the other side of some serious cash flow problems, my accountant advised that I simply increase my prices and ramp up the sales effort. 6 months later, I'm flying. So what are your thoughts on increasing your prices? A bit controversial, but Helen, what are your thoughts there?
I mean, you don't want to end up pricing yourself out of the market. That's the thing. I suppose if you're going to consider putting your prices up, then, you know, is there opportunity for you to do so in your industry? What are your competitors' price levels like? Because you don't want to end up pricing yourselves higher than them. If somebody can go to your competitor and buy exactly the same thing and, you know, get the same service levels and things like that. So I'd definitely, you know, just do some research in your industry with your competitors, but maybe before putting your prices up, try and ramp up your sales effort, do some marketing campaigns and things like that first, and see whether that, you know, gives you a little bit of an effect, and then maybe consider putting your prices up.
Colin, what are your thoughts on raising your prices?
Yeah, I mean, I think there's so many different ways to look at it, and it totally depends on what business you're in. I mean, I've heard of a lot of software companies that have doubled their prices and not seen any effect on their sales. and even if it's even if there's a if it's a smaller percentage, then you're still winning. So yeah, getting the right price in a number of markets is really difficult, and something that, like, he just mentioned in terms of, yeah, like, put up the prices and we're flying. And I think, it's hard. It's good to know which one it is. Is it because you're doing more sales? Is it because your product is now perceived to be of higher value? There's so many things to think about in terms of pricing. But yeah, if you're pricing too low, then that's where the business model is going to struggle. And it's great to be able to model what if scenarios and say, what if we do put our prices up and sold less items at a higher price? How would that impact us?
And Ashley, your thoughts on that one?
I mean, I definitely consolidate what Helen said in terms of looking at what market you're in, go and see what your competitors are doing, then use cash flow business models and go and take a look at what if my price was this amount, what is if it's X amount, and don't forget, don't be scared to actually reduce your prices as well. Having a high price or increasing your price of your product or your service is always seen as bringing more money into the business. But it might be actually that you started a little bit too high. So by lowering the prices, you're actually going to really increase your sales, and then you're going to get a much better cash position in that way. So it's not always about increasing. Sometimes it's actually taking stock and just reducing it a little bit as well.
Great. We've got sort of 5-10 minutes left, so if you want to get a question in, do post it now in the box on the screen on the right hand side. I'd just like to, you three of you speak to small business owners regularly, and so it'd be good to see some sort of real life sort of stories, case studies wise. What are some of the common mistakes that some of the real businesses that you speak to on a daily basis of sort of make? Ashley, do you want to start there?
I think one of the most common businesses in terms of making mistakes. In fact, this week alone, I visited one of my friends who had just started using Xero. He just wanted some advice, and sometimes it's just not keeping on top of your accounting and really, really just making the time. Like his accounting was in a bit of a mess. He didn't have a clue what the equity was, how much money he was coming in, how much money was going out, and if you haven't got that clarity in your business, how do you know how your business is doing? How are you going to make decisions where your business is going forward? So just keep on top of it and don't bury your head in the sand. That's what a lot of business owners will do. I'm too busy to deal with it, or I just want to go and forget about it, and then until it's the last minute, you're going to need to do my financial year end, I need to do my VAT return, you're pulling your hair out. So keep on top of it, and again, use things like bank feeds to really, really help get all of that information coming in on a daily basis. It's so easy just to keep on top of it once you've got it going. So definitely, yeah, keep on top of the numbers.
And Colin, for you?
Yeah,
mistakes?
I mean, it's the classic ones, really. And I think not putting realistic expected payment dates on invoices. So, you could be sitting with, a huge amount of cash that isn't, like previous person mentioned about, which is a liability. It's basically money that you're not, you're expecting to get in your model, and you could be sitting going, well, I've got all this money coming in. But really thinking through, well, when did this person normally pay? And I'm putting realistic invoices, and Xero even has an expected payment date now that you can add in to model that, and that flows into something like float as well. So we can actually predict to the day when what your bank balance is going to look like based on those late payments. I think also predicting the taxes, like Ashley was saying. You've got corporation tax, you've got VAT, you've got PAYE. Those are kind of three ones that often catch people out, and those are kind of the main things that we'll see. And just also forgetting to put stuff in that they've committed to. So they've committed to go to a conference, or they've committed to take an ad that they're going to have to pay at a certain date. Just having a place where you can add all that stuff in and not forget about it is really important.
And Helen, on mistakes.
Yeah, I mean, other than what Colin and Ashley have said, I think a mistake that I potentially come across from not just speaking to the small business owners themselves, but the accountants that we come across, and coming from that background myself, is that some small business owners don't talk to their accountant enough. and don't just see your accountant as, you know, potentially a person that you see once a year or once a quarter when you take in your stuff to do their VAT return. You know, what we're seeing is a shift in the industry where accountants are trying to be more proactive with their small businesses that they look after and do the accounts for, do the VAT returns for. So you try and take some control yourself of doing some of the bookkeeping yourself if you can. You know, there's lots of training and education available to show you how to do that, and your accountant will probably help you out with that education as well. And then make those discussions that you're having with them on a regular basis more value added to you, more value added for you to grow your business. So make it more less about all of the compliance work that we would say about getting the numbers crunched, and more about how can I make this business a success. So definitely become your accountant's or bookkeeper's best friend and speak to them about growth instead of just how do I enter this bank statement into my account software.
It's almost if they knew, but a cynic has come back and said, I've always just relied on my accountant for all that stuff. That's what I pay him for. Should I really be more on the ball? But I think, yeah, what you were saying in there is don't just let your accountant get on with it. You know, have a proper conversation on a regular basis. Because
then you're getting value for your money then. So you're not just paying them to do the stuff that you could do yourself. You're paying them to help you grow and, you know, have longevity in your business as well.
Well, we're almost at an end with this this live Q&A, but in the best way that these things always end is you've got to end on a couple of tips. So all of you, if viewers of this Q&A had to sort of go away with a couple of things, key things that they can do or remember, what would they be? And sorry, Ashley, but I'm starting with you.
Go and check out my fantastic day-to-day presentations on our Xero education pages. Come and register for those. I used to actually lecture accounting for adult education, so I do know what I'm talking about. Some of the actual presentations are based around old courses that I used to teach. So go and check out the basic bookkeeping ones. You'll have a much better understanding of how your accounts are formed, and also how you can also keep all your information up to date in Xero as well.
I'll allow that plug. Colin, what about you?
I mean, I do seriously think using a cloud accounting package like Xero is a massive thing that people should start looking at. If you're not doing it like that, the benefit of having something you can use from anywhere is it will make a massive difference just to how you engage with your business. I think, just it's amazing how just seeing the numbers more clearly will give you this kind of insights that you weren't expecting. And yeah, I think all the stuff we've covered, chasing up invoices, and even if you don't use a package like Float, just get a spreadsheet out and have a go and see if you can come up with a list of things that are coming in and coming out, and just see how that feels.
And finally, Helen.
Yeah, and I think it kind of goes back to the last point that I mentioned and what a cynic said it in the chat panel as well, with, you know, have a good relationship with your accountant. If you don't get on with your current accountant or bookkeeper, you know, you're not tied into them for life. Go and find someone that you actually value and you get on well with, and just make sure you have that really good regular relationship with them, and make sure that they help you. But if you're not in the cloud, make the move to the cloud in some form or another. And please, 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 as an ex-accountant in practice, don't just dump your accountant with a shoebox or a plastic bag full of receipts and invoices. Try and, you know, take a bit of care over that yourself, over your records, and get something like a receipt bank and take photos of everything and get it all in the cloud, instead of, you know, cluttering up your house or your office. And, you know, just take the care over your business.
Brilliant. Ashley, somebody has asked where can they get the link to your educational stuff? Is it on the Xero website?
So if you go on to Xero.com, the homepage, on the top right hand side you'll see a little more drop down menu. Just click on the Xero U link, and then you will see a big blue box on a page, and it will say Small Business Education, and you can click through there and you can go and register for that and come and join me for my great presentations. It'd be great to see you on there.
Brilliant. Well, That's it, almost bang on the hour. Thank you so much for all three of you. That was brilliant advice. So thank you to Ashley and Helen from Xero and Colin from Float. We're working with Xero over the next few months on BusinessZone.co.uk. We've got loads and loads of new content going up over the next few months, all on this subject. We've just published a couple of great pieces on how to deal with an accountant, which is very topical. So do take a look at Business Zone. And we'll see you again for another one of these very soon. Thanks, guys.
Thanks, guys.
Thanks.
Bye.